Have you ever opened a free checking account and wondered, how can banks afford this? After all, banks are businesses, and businesses need to make money to survive. The truth is, even when you don't see a monthly fee on your statement, banks have clever ways of profiting from your business. We'll unravel the secrets behind how banks generate revenue, even when offering services that appear free. Get ready to explore the fascinating world of interest rates, fees, and investments, all key players in the banking profit equation. Stay tuned as we delve into the intricacies of banking and reveal the strategies banks use to generate profits. Banks aren't inherently out to exploit you, but they do operate on a system designed to benefit both them and their customers. Think of it like a game. Knowing the rules is essential for success. We'll break down the banking playbook into three main sections: interest rates, spreads, fees, and investments. These are the pillars of bank profitability, and understanding them is key to unlocking financial clarity. Join us as we demystify the world of banking and empower you to take control of your financial destiny. At the heart of a bank's profit-making machine lies the concept of interest rate spreads. Imagine this: you deposit $1,000 in your savings account, and the bank offers you a modest 1% annual interest rate. It lends a significant portion of it to other customers in need of loans, credit cards, or mortgages. The bank charges those borrowers a much higher interest rate, say 5% or even higher, on the money they borrow. This simple yet powerful mechanism forms the foundation of their revenue model. While interest rate spreads form a substantial chunk of bank revenue, fees and charges play a significant supporting role. From monthly maintenance fees on checking accounts to ATM withdrawal charges and overdraft protection, banks have become masters at generating income through a myriad of small transactions. Overdraft fees in particular have become a point of contention, with some banks charging exorbitant amounts for what essentially amounts to a short-term loan. Opting for online banks, credit unions, or accounts with fee waiver options can significantly reduce your overall banking costs. Remember, knowledge is power when it comes to navigating the often confusing world of bank fees. Beyond lending and fees, banks engage in another profitable activity: investing your deposits. While a portion of your money is kept readily available for withdrawals, banks are permitted to invest a significant portion in various financial instruments, aiming to generate additional revenue. These investments typically lean towards lower-risk options like government bonds and highly rated corporate debt securities. While these investments might not yield astronomical returns, they provide a steady stream of income for banks, further bolstering their profits. This balance between investing for profit and safeguarding depositors' money is a delicate one, forming a core aspect of a bank's operations. The relationship between your deposits and a bank's profitability is a symbiotic one. Banks rely on your deposits to fund their lending activities and investments, generating the profits that allow them to operate and expand. In return for entrusting your money with them, banks provide a range of services designed to simplify your financial life and provide you with access to credit and other financial tools. By choosing banks with competitive interest rates, transparent fee structures, and a commitment to customer service, you can ensure you're getting the most value for your money. Remember, knowledge is your most powerful tool when navigating the intricate world of banking and finance. We've established that interest rate spreads are the bread and butter of bank profitability. But how do banks determine the specific interest rates they charge and pay? It's a delicate balancing act, influenced by a complex interplay of factors like market competition, central bank policies, and the borrower's creditworthiness. Banks aim to maximize their profit margin by charging the highest interest rates borrowers are willing to pay, while keeping those rates attractive enough to secure a steady flow of loans. Simultaneously, they need to offer competitive interest rates on deposits to attract and retain customers. Fluctuations in the prime rate can ripple through the entire financial system, impacting everything from mortgage rates to credit card interest charges. Navigating the world of bank fees can feel like traversing a labyrinthine maze. With so many different types of charges lurking around every corner, it's easy to get blindsided by unexpected deductions from your account. Monthly maintenance fees are a staple of many traditional checking accounts. Luckily, many online banks and credit unions offer fee-free checking accounts, providing a more cost-effective alternative. ATM withdrawal fees are another common trap, especially when using out-of-network machines. Sticking to your bank's ATM network or opting for banks that reimburse out-of-network ATM fees can help you avoid these charges. While we often associate banks with lending and safeguarding deposits, their investment activities play a crucial role in their overall profitability. Government bonds are a popular choice for banks seeking low-risk investments. These bonds, issued by governments to finance public projects, offer a fixed rate of return over a predetermined period, providing a predictable stream of income for the bank. Corporate bonds, issued by companies to raise capital, offer potentially higher returns than government bonds, but also carry a slightly higher risk. Banks carefully assess the creditworthiness of the issuing companies before investing, aiming to strike a balance between risk and reward. Remember the prime rate we discussed earlier? This seemingly abstract figure has a tangible impact on your financial life, influencing the interest rates you pay on loans and credit cards. When the prime rate rises, so do the interest rates banks charge on variable rate loans, making borrowing more expensive. Conversely, when the prime rate falls, borrowing becomes more affordable, potentially stimulating economic activity. Understanding the relationship between the prime rate and the interest rates you pay is crucial for making informed financial decisions. Fixed-rate mortgages offer the security of a consistent interest rate throughout the loan term, while variable-rate mortgages fluctuate with changes in the prime rate. Overdraft fees have become a contentious topic in the banking industry, often criticized for disproportionately impacting low-income customers. These fees, typically ranging from $25 to $35 per transaction, are charged when you attempt to spend more money than you have available in your checking account. Understanding how overdraft fees work and taking steps to avoid them is crucial for protecting your financial well-being. Opting for overdraft protection, setting up low balance alerts, or simply being more mindful of your account balance can help you avoid these costly charges. While we've delved into the various ways banks generate revenue, it's equally important to recognize the valuable services they provide in return. Unlike stashing cash under your mattress, depositing it in a bank provides a level of protection and peace of mind that's hard to replicate. One of the most significant safeguards is deposit insurance provided by government agencies like the FDIC in the United States. This insurance protects your deposits up to a certain limit, typically $250,000 per depositor, per insured bank, in case of bank failure. Beyond deposit insurance, banks employ sophisticated security measures to prevent fraud and unauthorized access to your accounts. Gone are the days of rushing to the bank during business hours to deposit a check or withdraw cash. In today's digital age, banks offer unparalleled convenience, allowing you to manage your finances anytime, anywhere, with just a few taps on your smartphone. Online banking platforms have become the norm, providing 24/7 access to your accounts, allowing you to check balances, transfer funds, pay bills, and even deposit checks remotely. Mobile banking apps take convenience a step further, putting the power of a bank branch in your pocket. This level of convenience has revolutionized the way we manage our finances, simplifying our lives and saving us valuable time. Beyond safeguarding our savings and providing convenient access to our funds, banks play a crucial role in facilitating financial opportunities through credit and loans. Need to finance a new car, purchase a home, or cover unexpected expenses? Banks provide a range of loan products designed to meet diverse financial needs. Mortgages, for instance, allow individuals to purchase homes they might not otherwise be able to afford up front. By providing loans with manageable repayment terms, banks enable homeownership, a cornerstone of wealth building for many. While it's essential to borrow responsibly and understand the terms and conditions of any loan agreement, banks undoubtedly play a vital role in facilitating financial opportunities that can improve lives. In today's fast-paced world, managing our finances effectively can feel overwhelming. Thankfully, banks have stepped up to the plate, offering a suite of automated tools and features designed to simplify money management and help us achieve our financial goals. Direct deposit, for instance, has become a staple for many, allowing employers to deposit paychecks directly into employee accounts, eliminating the need for paper checks and trips to the bank. Similarly, automatic bill pay ensures timely payments for recurring expenses like utilities, rent, and credit card bills, preventing late fees and potential credit score damage. Some even offer goal-setting features, allowing you to set savings targets and track your progress, making it easier to stay on top of your financial aspirations. While we often perceive banks as transactional entities, they also serve as valuable resources for financial guidance and expertise. Many banks employ financial advisors who can provide personalized advice on a range of topics, from investment strategies and retirement planning to debt management and insurance needs. These professionals can help you create a comprehensive financial plan tailored to your specific goals and risk tolerance. They can also provide valuable insights into market trends, investment opportunities, and strategies for maximizing your financial well-being. By leveraging their expertise, we can make more informed decisions and navigate the complexities of the financial world with greater confidence. Section 1. The two sides of banking: profit and partnership. As we've uncovered throughout this exploration, banks operate on a fascinating interplay of profit generation and customer service. They are businesses, driven by the need to generate revenue and ensure their own financial sustainability. Yet they also play a vital role in our financial lives, providing essential services that safeguard our money, facilitate transactions, and open doors to financial opportunities. Understanding this duality is crucial for navigating your banking relationships effectively. By recognizing the ways banks profit, we become more discerning consumers, empowered to seek out the best deals, minimize unnecessary costs, and ensure we're getting the most value for our money. Remember, the relationship between a bank and its customers is a two-way street. Banks rely on our deposits and borrowing activity to fuel their profits, while we, in turn, rely on their services to manage our finances, access credit, and achieve our financial goals. Section 2. Empowering your financial journey. Tips for smart banking. Now that we've demystified the world of bank profits, let's equip you with some practical tips to ensure you're making the most of your banking relationships and avoiding unnecessary costs. Knowledge is power, and by implementing these strategies, you can take control of your financial well-being. First and foremost, shop around for the best deals. Don't settle for the first bank you encounter or assume all banks are created equal. Compare interest rates on savings accounts and loans, scrutinize fee schedules, and explore the range of services offered by different institutions. Online banks and credit unions often offer competitive rates and lower fees compared to traditional brick-and-mortar banks. Secondly, be mindful of fees. Those seemingly small charges can quickly add up, eroding your hard-earned savings. Opt for accounts with low or no monthly maintenance fees. Utilize your bank's ATM network to avoid withdrawal charges, and explore overdraft protection options to prevent hefty overdraft fees. Knowledge is your best defense against hidden costs. Section 3. Taking control of your financial destiny. Knowledge is power. In the intricate world of banking and finance, knowledge is your most powerful asset. By understanding the mechanisms of bank profits, the services they provide, and the strategies for maximizing your benefits, you equip yourself to make informed financial decisions that align with your goals. Remember, banks are not inherently out to exploit you. They operate within a complex system designed to benefit both themselves and their customers. By understanding the rules of the game, you can navigate this system effectively, ensuring you're not leaving money on the table and making choices that support your financial well-being. As you embark on your financial journey, remember that you are in the driver's seat. By staying informed, asking questions, and advocating for your financial best interests, you can harness the power of banking to achieve your goals and secure a brighter financial future. If this helped you take control of your banking, hit like, subscribe, and comment below. Smart banking starts now.